the world. Others may or may not understand, but bankers will understand. Till next 1.5 hours, I have planned to speak to you on these many issues. We were having some kind of clay tables available in Mesopotamia. So commercial bank has a longer history than the central bank. Probably there was a need for central bank. That's why central bank carved out of the commercial bank. When it was taking place, innovations were taking place in the regulated entities, call it debit card, credit card, or electronic money. But the fiat money, the currency, physical currency, there was no innovation taking place for a long time. So we have to see whether we can be able to provide some central bank money, or you keep the money in a wallet, prepaid instrument for your convenience. If you are keeping in your pocket, risk is high. If you are keeping in your wallet, risk is less. So electronic money is being used. So electronic money is different from CBDC. CBDC is used by the central bank. This is central bank's liability. Now coming to application programming interface or the technology part, central bank creates a technology or application programming interface for the issuance of CBDC. CBDC will use the digital infrastructure available in the country. In a digital infrastructure available in the system, but cryptocurrency will replace this financial system infrastructure. It has its own technology-driven infrastructure. Now settlement is instant and final in case of CBDC. Instant and final connectivity. CBDC can be stored, transacted both online, even offline. That is what is the problem. Come to security, layered security protected in hardware. The security is inbuilt in the application programming interface, technology driven. Here, participant managed asymmetric key. The security is scalability, central bank digital currency, thousands of transactions per second you can do. It is scalable fully, and they backed out also. They could not be able to manage. So in February 2025, 3 countries have launched CBDC. 19 countries they are developing. 39 countries they are having research. 21 countries they are inactive. 2 have cancelled, and 6 others suddenly they felt that probably there is no convincing reason why CBDC should be introduced. Those things also we'll just have a look at it. So this is your landscape, global CBDC landscape. Many countries are now on pilot. Some countries have introduced and others are doing research. Many countries believe that if it is an innovation should not be banned. We can regulate it. India's position, I will talk to you little later. In developing this, CBDC, they have a number of projects on hand of BIS, and they are having this innovation hub attached to many central banks in some countries. Your project Ice Maker, hub and spoke, and Sweden, Norway, Sweden, the use of cash is reduced almost to zero. Means commercial bank innovations are so high, cash is not being used. Now, Rosalind Franklin is a Nobel laureate. In her name, this project Rosalind is there. This is a kind of, DNA, private sector, public sector coordination, and this is a part of G20 agenda. And this G20 agenda was set in 2020. G20 agenda actually 2020, there was COVID. When there was a COVID, there was a need for, when cash payment is there, 2 parties should come together. So this G20 in 2020 gave an agenda to the Committee on Payment and Market Infrastructure, how to develop this, CBDC, and CBDC can be used for cross-border transaction, and the objectives are also many. Just I am giving you this Project Nexus, how the Project Nexus works. Project Nexus works by integrating the immediate payment system of 2 countries. He is requesting his service provider, please send it to so-and-so in, say, USA. The gateway is there. From this gateway, when it crosses the destination gateway, there is a conversion of currency. It varies. So there are several designs that are discussed by BIS. I will tell you some design which are being considered the best kind of design by some some central banks. Just coming to this, just have a look at it. Central bank digital money, it can be available for financial institution. This is called wholesale CBDC. It can be available to general public. This is called retail CBDC. Why it is not CRR reserve? CRRs are certain percentage of demand and time liabilities. If it is account based, KYC, etc., other compliance, this they are otherwise doing with the commercial bank. And token based means a token is available. That's why central bank would not like to adopt the decentralized technology, which can destabilize the financial system. Coming to distribution, central bank can distribute directly. Coming to distribute, then privacy account based. See, at least privacy is more in case of token based, but it is not completely anonymous. Compliant, private, everything cannot be achieved together. There are some trade-off or multiple records so that you can revive very quickly. But if you are keeping multiple records, mostly cyber security, whether your transaction is taking place in a secured environment or not, and it is available, okay, it will be fast. Fast means, see, just as compare RTGS or credited to your account immediately. RTGS is more important from the point of view of giving credit immediately. In case of a retail transaction should go through immediately. Settlement may wait for some time. So anyway, so this the benefit should accrue to the user. It may be inclusive, it may be transparent, but whether it is user friendly, we don't know. Designed around comparative advantage, open to competition through token based, but resilient, whether it is secure or available, that it can be efficient, cost can be reduced through technology, but user friendly, inclusiveness, transparency, don't know. Physical currency, 2% should be available at a particular point, then only physical currency can be exchanged. The settlement risk, see, we are using UPI. We are using all these. So when you are making transaction through UPI or through the CBDC can be used for real-time money transfer from one person to another. It is competitive. Then government will continue to get signature revenue, even if, and in that case, at least central bank money should be available in digital form as a building block for cross-border payment. Cross-border payment, just have a look at it. I am giving you some information about the cross-border transaction. Cross-border payment, 195 trillion US dollar. Is likely to be $320 trillion within the next 2-3 years. Not very high compared to the cross-border transaction taking place, but 10.6 trillion is also not a small number. The cryptocurrency is now gradually increasing its presence in the global transaction. Coming to global crypto exchanges. So if you are using blockchain technology and transact outside the crypto exchanges and message standard, data exchange, data localization, democratic right of the individual who is creating the data. DPDP is your Digital Personal Data Protection Act 2023. BIS, FSB, IMF, IIF involved in the orderly development of CBDC. But scalability is a problem. Security also, you don't know, secure or not secure. Indian case we will discuss, but it is there is some sort of ambiguity with respect to this, digital currency. But CBDC cannot be completely anonymous in any way, like cash transaction, bank deposit related transaction. So the total demand for money remaining more or less same in the short run. In case it will reduce bank related activities, this will lead to disintermediation. Public trust comes from cyber security and operational risk. If operational risks are not there, cyber security is taken care of, people can develop trust. You can make payment. Suppose you have to make payment say 10 rupee, you are having 20 rupees. This 20 rupee will be destroyed. Given the level of literacy and awareness, financial inclusion in our country, so cost benefit analysis needs to be done. Concern around programmability of the CBDC may be delegated to the second tier commercial bank. It is a overlay over the functionality provided by the central bank. Possible. It is threatening the banking system. Your system should be better than this cryptocurrency, efficient and design principles I have discussed. They will match the interest rate paid on this CBDC, or CBDC interest rate should be the floor, or whatever the case may be, or the current account money will remain with them, or it will go to this CBDC. So there is a lot of problem. If interest is paid on CBDC, it is argued that if interest is paid, this will be an additional instrument in the hands of the central bank to influence transmission. Where do we stand with respect to? Now we see RBI Act 1934. Anything issued by the central bank will be legal tender. Your daily transaction in 2000 by December 2023. After December 2023, suppose the merchant is not having CBDC QR, but is having UPI related QR, then P2P and P2M payments, but transaction takes place, hardly any transaction takes place. You can make it private. You can comply with KYC, anti-money laundering problem, then combating terrorist financing, etc. You can do it. UPI transaction, around 800 to 900 million people are using. And transaction, CBDC retail outstanding 2021, 22, 23, it was brought under regulation. These things are written here in cryptocurrency regulation in India. Bitcoin and other cryptocurrencies are then regulatory authorities, RBI, Ministry of Finance and SEBI. Private cryptocurrency is likely to be regulated rather than banned in the light of the Supreme Court order. Money laundering compliant. Otherwise, these exchanges will not be allowed to work. Crypto exchanges, cryptocurrency trading, and the application of blockchain technology will be deprived of that. This is decentralized finance. You have no control over this. Decentralized status will be withdrawn from the cryptocurrency to be traded in the exchange. Trading of cryptocurrency as crypto asset will be limited to Indian exchanges, and cryptocurrency holders will not be allowed to maintain private crypto wallet issued by regulated entities. Cryptocurrency, private digital currency, it is different. And global think tanks, they are now active in addressing the challenges of CBDC introduction. They are trying to address. March 2024 data is available. I think it is 247 crores or so. A small amount. 24, I think 23. So after that, it is coming down mostly because of UPI. United Arab Emirates, Singapore, Bhutan, Nepal, Mauritius, France, and Sri Lanka. The 7 countries you can make international transaction with our.
And now I like to open the floor for questions and observations. So first I will invite our mentors for their observations. Dr. Bhoi and Dr. Farid Ahmed and Dr. Rao, they are there. So I'll request them for their comments, and after that we'll proceed for questions from the audience.
The CBDC must be inclusive, secure, and respects, most importantly, the user privacy. And innovation must, and from the stakeholders' point of view, RBI, commercial banks, fintechs, other regulators, and the public, digital accessibility. And the future of CBDC in India, definitely it is a bright. Definitely it will revolutionize the India's monetary ecosystem. Coming to its relationship with the monetary policy, as you said, it is not yet clear. Real-time data on spending patterns, enabling more accurate forecasting of inflation and economic activity, but at the same time, It requires a careful design to avoid unintended disruptions.
So there are questions. There is one question, of course, in the chat box already, that when our country is ahead of many advanced countries as far as digital payment structure is concerned, what prompted the central bank to come up with one more mode of digital payment? And ultimate goal is to facilitate payment, which is much more convenient and faster.
But in course of time, suppose the currency in circulation is around 38 lakh crores. But in course of time, if physical currency will wither away, risk involved in banking channel cross-border transaction is high, not cost-effective, delay, and therefore CBDC will provide a better option for cross-border transaction. And cross-border transaction is increasing at a very rapid rate. And your wholesale RTGS can be interoperable across the country, and wholesale remittance, etc., can be done through interlinking this RTGS of different countries.
For sharing with us today. And I also thank the wonderful audience that we had today and our mentors, Dr. Fareed Ahmed. The video recording and a comprehensive summary of the session with key takeaways will be shared